Hi, this is Andy Cruz with VAEligible.com, and this is a rate alert video on May 30th, 2013. Today we're going to discuss a couple of topics: why are rates on the rise, how it happened, and then what to do next. So we'll jump right on in. The first thing is, why are rates on the rise? I'd say that headlines, the Fed, Wall Street, and consumer confidence, amongst many other things, have caused rates to go up sharply in the last 2 weeks. Now, some of this is, I guess, what you could call supply versus demand. When there's less money available, it becomes more expensive to get. And because of some of the headlines, the Fed minutes and Fed comments, Wall Street trading that's been happening, and the different economic data. I mentioned consumer confidence because it's just one of the many things that's measured. Unemployment, jobs has a lot to do with this too. The housing market data, as far as housing prices increasing, has a lot to do with this. So there's a lot of variables that are being taken into consideration. But if you go back to simple economics 101, supply versus demand says that when there is less of something available, it is more expensive to get. So, simply put, the party's almost over. This low interest rate environment that we've had, where you're getting government loans, FHA, VA loans at 3.25%, and you've had conventional loans at 3.5%, 3.75%, even 4%, we're starting to see that taper off. The government has been helping keep mortgage rates low for months and months on end, and now there's a lot of indication that the party of that is almost over. Trading is indicating so. Some of the fundamental data as far as the bond market is indicating so. But let's talk real quick about how that happened. First of all, it's been a frenzy. The trading frenzy that's happened in the last 2 weeks is just incredible. What you see in the headlines is all-time highs in the Dow and also in the S&P, and it's thrust the markets into all-time highs. So what does that mean? Well, when investors can make more in equities, the stock market, they will. And they did. The market has been rallying big time. And so when money is moved away from bonds and into the equities, it becomes more expensive on the interest rate world that affect mortgages. So, what do you do next? Well, there's a couple of things. Get started. If you are looking to refinance or you are going to be purchasing a home, you need to get started now. If you're going to try to put yourself in a position to win, it's better to be armed with the right information early on so that you can make educated decisions along the way. The next thing is, tell others that you care about. Here's what I've seen in 8 years of doing this business. You know what you know, your friends know what they know, and you combine what you guys know. Unless you're talking to people that are in the market or that are in the industry like ourselves, it's real difficult to see this on a day in, day out basis and look at the little idiosyncrasies that are changes, or I'll say themes, or maybe there are certain trends that are happening. So you need to tell other people that you care about, that if you've heard them say they're looking to refinance or purchase, or you've seen them looking for homes, you need to help them out. You need to put them into the hands of a trusted advisor who knows what's going on. It can help them, and it can help them navigate this crazy interest rate change, what's happening right now, but also what's due to come in the future. And the last thing is, stop chasing mermaids. What the heck does that mean? Stop chasing rates that don't exist. There's a huge difference in what you hear on the radio, what you see in your internet sidebar ads, your Google AdWords advertising. There's a lot of low interest rates that are still being posted online because they're part of marketing campaigns and advertising campaigns. Those are set forward maybe weeks or months ago. They were put in motion, and they're probably campaigned for weeks or months to come. So don't be duped by, let's say, unrealistically low rates you see online. You need to ask a professional who can get you live pricing like we can. So if you want to know exact scenario for scenario, what's going on in the market, what it looks like for you, ask. Definitely ask questions. And again, stop chasing those mermaids. Don't be a rate chaser, because if you're chasing rate, that means you're behind the curve as opposed to being informed ahead of time like we are on what's coming up and watching for trends. This is why this big Rate Alert logo has been on this entire presentation, is that we're subscribers of Rate Alert, and we have on the minute and every single hour of the trading day access to bond prices and what it's doing, what direction it's heading, so that we're best equipped to help you understand when you should lock your loan or if you should wait. Now, if you have any further questions, we encourage you to visit us online at vaeligible.com or at Facebook. Come on by and like us at facebook.com/vaeligible. Thanks for watching.